The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. As always, we like to meet at this time, and that time is...
The following takes place between 2 p.m. and 3 p.m.
Oh, what do we got going on today? Well, they're deciding to keep rolling it up the flagpole and see if anybody salutes. We're up 10 points in the S&P cash. We had about 2.1 billion shares on Friday during expiration, which is normally a fairly light day. We're starting today with this 1.85 billion shares. So what are we off? 350 million, 400 million. Quite a lot for a Monday out here and being up. So yet another light volume push, which will probably be even lighter. So we'll see what's going on. Almost all the money is in the indexes and in the ETFs. Volume continues to be on the most of the stocks themselves incredibly light. Saw some what looked like and could have been early in the morning some exhaustion moves higher. Apple was kind of interesting. It popped almost instantly to 154.58. It's trading at almost a buck underneath that now. Some of the other ones out here also were acting quite weird and gappy in the morning. And many went higher only to be kind of in the middle of their trading range. Again, not a lot of juice, just everybody's waiting for the next reason for the market to go higher. Showed in my newsletter today that we are on all-time lows in what people are shorting, at least in the equities. So that may be kind of interesting to figure out that the individual stocks out here have very little, if any, on overall compared to the ETFs, which have a little bit more, but still dramatically low short interest, which tends to make you think everybody continues to be on one side of this boat, and that is that the market can only go higher. What else do we have? Oh, so I needed to zoom out. You said zoom in, I thought. Oh, you wanted me to zoom out a little. I kept trying to zoom in. Oh, boy. We've got a... Oh, that was way out. Didn't seem to matter that much. Maybe that's a little bit better. It's Big Dave Day. Okay. Just talking to the engineer. Oh, that's better. I was thinking he needed me to zoom in. I kept on zooming in. He needed me to zoom out. Probably just had my nose on TV. Anyway, we're a little higher, 10 points. When you look at some of the way that the rest of some of the things are trading, it certainly looks like this market is incredibly stretched. Not uncommon to see a market pushed up into a 3-day weekend. But my question is, how are you going to push this thing up when it doesn't even have volume on Monday? Again, volume very tepid as we go in there. Not much in the way this week also in earnings. There's a few. I think Lowe's is out, but Home Depot's already been out. I think Agilent after the bell tonight, but that's about it. Going to be a quiet week, and I think the thing that we need to watch for is probably headline risk in the newspaper outside of the market. I don't see a lot in the earnings this week that could really move it unless there's a giant and massive surprise, which just doesn't look anywhere close. As always, we like to start off the day with a little bit of history.
There it's all just a little bit of history repeating.
It is history repeating. On this day in 1996, Iomega, the maker of the chip, the zip disk drives, becomes the first love child of the internet investing boom, boosted by individual investors and the Motley Fool, egging each other on in the newfangled forums called chat rooms and bulletin boards. Ugh. What are those? What's a chat room and a bulletin? Anyway, the stock hits $27 a share, adjusted for 2 stock splits in the previous 4 months. Even though it's followed by almost no Wall Street analysts, the stock's up over 2,000% in just 1 year. Unfortunately, exactly 1 year later, Iomega's stock will end up at $8.62, almost a 69% loss, 68% loss. I have been comparing a few stocks to Iomega. It's the first one that I really saw where the madness of crowds took over. One of the things that was so interesting to me is that I sold these drives and the cartridges about 1990, 91, before I changed and went full-time in what I was going to do for the next 12 or 13 years. What is it, 1990? Anyway, these things were little cartridges that looked like just bigger 3.5-inch floppies, and you plugged them in, and you had like 100 megabytes on them. Back then, hard drives were 50 megabytes. They weren't particularly fast, but if you had a lot of data, you could do it. You could use them, and they were acceptable. I think the cartridges were like $50 a piece. They were fairly expensive back there for 100 megabytes, but you know, that you could take it out, put it in your safe at night. The military and CIA really love these things because you could check them in and check them out, make sure that they were so no one could get a hold of. But why really we started to see the beginnings of the dot-com boom in this stock. Again, big, high pollutant Motley Fool bunch telling everybody how this would go through and to the moon, and pretty much leaving most of their customers in that stock when it did blow up. But as I remember, this thing was, and could, I remember Joe Kernan would just bring up even the smallest speck that this company might have problems with earnings and evaluations, and man, would he get the hate mail. No one wanted to know anything about the possible downside of this company. And I can think of a couple of people and companies right now that fall directly into this mold. But the first one I actually witnessed as a stock trader. In 98, of course, I went pretty much full time and tried to do as little work at the company as possible. But one of the most interesting stocks that I've ever seen and should be studied by anybody in the stock market and technology. It's very easy to get carried away. I wonder if we're doing that right now. A variety of stocks. We'll be back after this.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And had some email questions over the weekend about the 3x3 and Joe DiNapoli double repo pattern, so I'm going to cover that again. A basic pattern is that you're above a moving average, in this case, Joe DiNapoli's 3x3 displaced moving average. That's taking the last 3 days and moving it forward 3 days in the future. So it is actually kind of like a derivative, if you remember your high school first year calculus, where you're actually trying to find the slope of a curve at some point. Kind of his take on how to do it simply and rather crudely, but better than anybody else. Almost no one has any kind of indicators that actually give you any kind of thing to look at in the future. But was talking about, in thrusting markets, a lot of people like to bring up some of the other parabolic stars, some of those. And in the right markets, those tend to work. These tend to look and work for me better overall. There's sometimes when those parabolic stars work very well, but most of it's not that kind of market. Let me put it the way that I think that they generally work very well. Anyway, on this one, we've got the 3x3 showing up here on Apple, and we ran right into that today. But the idea is that you have several days, 10, 15 days above it, and it's kind of a jumpy little indicator. So to stay above it, you have to have a pretty good thrusting action. You get a couple of days below it like you have, and then a close back above it. And then the next close back below normally is the confirmation. And most of the time, this thing's been very effective. You've also had a sign of weakness, i.e. it moved down, and it did so with some volume. It's not going to be too troublesome to see any volume in this. Apple today did kind of spike out there, ran right into opposition and pushed back down 16 million shares. That's compared to 27 million shares on Friday and 34 million shares on Thursday and 51 million shares on, what was that, Tuesday? Wednesday. So we're just coming back up into resistance. So you could look at this two ways. One, it's just coming back up here and filling the gap with no energy. The other thing you can look at is that it did come down underneath, go back up, and now the next move underneath this line, and it'll be advanced each day, is the trigger. And I think this thing's probably coming back down to 144, maybe 143 out here, which is not the end of the world for this thing. It's just that everybody's kind of way, as they like to say, over the tips of their skis. Yeah, ski jump reference. If you've ever seen anybody way over the tips of their skis and they continue going over, it's normally a bone-crushing crash. But hey, one man's opinion. But I am still fairly bearish again. Just the incredibly light and almost vacant short positions on many stocks. What else do we have going on out here? That was the first one I looked at. Of course, over the weekend, it was Let's Make a Deal with our wonderful president making a deal with Boeing. So that popped today. They're going to be buying the Arabs, what is it? The Kingdom is what they like to call it. Pulling back up. You need about 3 million shares. That May 9th high had 3 million at 185.78. We're about 50 cents underneath that, but so far today, just 1.8 million shares. And we might get close. A lot of volume comes in at the end of the day, but looking for a test of that 185 area. This has been kind of tough resistance. March 2nd, you had 184.29 at 5.5 million shares. So you've tested it once with 3 million shares. We've kind of popped it again today. And most of these times when you see the market roll over, it's the next close under this 3x3 displaced moving average. So this is a good time to start looking at that. And, of course, if you don't have that, as we've talked, you can just go to a 9-day moving average. It's not that much different and gives you a nice trend line to kind of look at it. But it's kind of another attempt higher here to this May 9th high. You fail, you come back up, and at this point, yeah, you really need some volume in a week where you're not going to see much. But you have some fairly decent news out here. Let's take a look at Microsoft MSFT. This thing kind of moved down last week, really didn't offer a lot of pep and zest off its lows of Thursday and Friday. Up a bit today, but no volume, almost 8 million shares compared to the 27 million shares on Friday and the 25 million shares on Thursday. And, of course, the 31 million shares down on Wednesday. So, we're in pretty light volume again, like I said, in a lot of these stocks on the way back up. Can they hang out all the way to Friday? They possibly could, but I think there's more than enough jitteriness in this market. But we get to Wednesday, we start looking at hearings on Thursday, and everybody starts looking at a 3-day weekend on Friday. I don't think they can hold this thing up on lighter volume. Question, Microsoft, do LinkedIn ops mean anything for stock price in the next 12 months? Yes. They have just started rolling off a lot of rolling out the new features that link LinkedIn with Outlook and a lot of other tools, especially tools inside larger businesses. We will probably never see these products, but a fairly decent amount of business can be done with LinkedIn. And my big thing is that Microsoft right now is probably going to see some dwindling sales in other parts of their business. LinkedIn can probably prop that up, but in the whole, I suspect that Microsoft is looking at a wash. In the near future, I think this thing's going to come back to $66, probably fail there, and probably come back around 60, $61, somewhere in that area. Actually, 62. That February 2nd low, I think, is where this thing's going to come back. and it'll probably have to base out there for a while. They've got some new things in the oven, but I don't think those things are going to generate any cash until the extremely late third quarter and fourth quarter this year. So nothing new. As I said last week, was it the week before? It was the week before. Very disappointed that Microsoft really didn't have anything to show in its developer conference that was new. It was rather quiet, and that's always, you're always wondering what happens 6 months, a year down the line. And if they don't really show anything new to developers, doesn't mean that there isn't anything new, but it certainly means that there's not a lot of technology to spur growth. That's the biggest problem I have. Same thing with Google last week. We kind of knew everything that they were going to say. There wasn't a lot going on. We'll look at Google when we come back, too.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. We're going to talk about Google here for a little bit. This thing's had a nice move. And from the 17th of April to, of course, the 17th of May, this thing was on a tear higher. Did pull back, did so with higher volume on Wednesday, did so with 2.5 million shares. Kind of back up here. Today, just 800,000 shares as we go back into this high from May 16th that had 2.5 million shares. So again, any of these stocks, again, there isn't confirmation for this pattern yet, but any close below some of these either 9-day moving averages, let's go back to the displaced moving average, or any of these displaced moving averages closes would be a sell signal on many of these stocks. And, generally you get a little bit of volume out in here. Now, when we look at Google, it's coming back down to the 890 area if it fills this gap. And I think that there's a good chance that it does. It's got several gaps below it. Only one real big one that would fall into a 3-gap play. So there's not a 3-gap play on this one. But what you want to see is these big gaps like that. This one only has one of them. There are a handful of gaps down below, but my guess is that this probably could come back in around that 890 area or $900 somewhere in that, which is not a bad pullback. It's not the end of the world. It's just the earnings weren't that great. They've got some problems in their near future. And the only reason that this stock probably goes higher from here, if I'm wrong, is everybody just bidding it up. The earnings, I don't think, are going to be getting any better. What else do we have? Okay, we're up 11 points, and it's 230, and actually 232. And do we have 2 billion shares on the NYSE consolidated tape like we normally start the show with, or even more? Nope. 1.99 billion shares. Billions and billions, but not 2 billion yet. Okay, so anyway, we've got a lot of these stocks set up like this. No confirmation yet, but just look for these things to close under one of your moving averages out here, your favorite one. Mine is the displaced moving average. It works a little quicker. And I understand kind of the reason why it was developed a bit more. But very interesting. Let's take a quick look at Netflix and FLX. See what this little doodad is up to today. This one's been bouncing around a little bit more, but you've got kind of the same thing. You had what? This was up since the 24th of April. Well, the 16th was the last day. Closed down below. Volume picked up. You've had 3 days now. See, Thursday, 6.8 million shares. Friday, 4 million shares. Today, 2.7 million shares so far. So you might get up to that. That's compared to the 8.2 million share down day on Wednesday, where this is now coming up against resistance. What you would like is this thing to probably pick up just a little bit more, close above this line, and then close back below it tomorrow or the next day. But, whether it's a couple of days or not, if this thing kind of really moves down even just a little, it's headed back down to 145. And that's no big deal. That's normally how markets work. This up day on the 25th, the gap higher had 20.7 million shares. So probably a good opportunity to buy this thing back at that level. Question to take a look at Amazon. We'll do that too. What do we have here? Someone wants me to have a mouse, touchscreen thermostat. Okay. Lots of junk mail. Trying to look in here to see whether or not there's something else. Okay, wanted me to look at Amazon. Nothing in this one. You did have kind of a close down below it, but this is not enough of a move up or a parabolic move higher to make me think that this one would be it. This one's just kind of still in that uptrend line, really hasn't broken out, and even the volume on the downside wasn't all that exciting compared to previous days higher. Amazon, the strongest stock in the market right now. What else do we have? You can always give me an email at path@tfnn.com. you can give me a call at 877-927-6648. And, of course, post a message in the den if you want. Okay. We'll look at a few other ones. Somebody wanted me to look at the TLT. So for John in Orlando, we will take a look at the TLT. This is coming back to this resistance level when all hell broke loose. That goes back to the 9th of November, down on 31 million shares plus. He came into this with 11.5 million shares on April 18th. We spiked into it on May 18th with 8.35 million shares. Not much volume out here, but my guess is that this 126 is probably some kind of giant line in the sand without an event to make that go away. I keep on thinking we're headed back down to 116. If you just look at a chart, probably a fairly good indication that 115, 116 area needs to get retested. If you got up in this 126 area and failed 126, 127 in this gap down with no juice like we've had the last 3 days, that would be very interesting to me and may get you that 116 back again. Question, has IBM bottomed? We'll take a look at that. Nothing that I would want to jump in front of. Buffett's selling. I can assume that he's selling more. He doesn't like sell half and then see what happens. If he's selling a third, he's probably selling all of it. So I would much rather get back into this thing once I know that he's quit selling, or that we've seen a quarter that he's quit selling. But I think he had 10 million shares or something. That takes a while to get out the door. And this thing has also gapped down twice. These are nice three-gap play looking gaps, too, in IBM. And my thought would be you want to wait for the next one down, and that may be at a 140 level, back down through this October 18th, 2016 low, or as low as the June 27th, 2016 low. Both of those from 136 to 143 could be likely lows in this. Energy off the highs that February 16th tells me one thing. That is, even if I found a bottom, I would assume this thing is going to need to consolidate for a while. So no touchy IBM. We'll be back after this.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. And we were talking about IBM. Yeah, I don't think how I could touch this thing unless it had one more gap, like these two before it. The gap down of the 19th of April and the gap down of the 5th of May. You get two of these. I'm going to say 80% of the time you get the third gap down, and that would be kind of what you're what you want to be looking at. Okay, so what else do we have? Okay, looked at IBM, look at Amazon, Netflix, Facebook. We haven't looked at the Facebook. Although there's some pretty angry articles out about Facebook over the weekend. Again, if we start looking at some of these patterns out here that look fairly good, which is this one you had, the 17th of April up to and including the 4th of May. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days above the 3x3. Few days down below it. Now it's getting ready to go back above it here. So one day above it, and then the next day below it. That's it. Then you pull the ripcord on these things, and normally they go back to where they started. In this case, this is about $140. So is that a big deal? $6 or $7 or $8 on a $150 stock? It's not. But it's more important what these stocks like Apple, Facebook, and all do. If they do start pulling back, they have so much associated weight that they've been pulling, since these are the handful of stocks that have been going higher, that you really need to look at it. A request from Andy to look at the IBB. Andy's from somewhere in Florida, unknown. iShares Biotechnology. We've talked about another pattern out here a great deal, which of course is this I'm going to call it asymmetrical triangle, but it's actually just a triangle, as John from Philadelphia tells me. What these are, of course, are lower highs and higher lows, and you just get into these kind of bigger patterns out here, and of course you're going to get the first one is kind of a head fake out of these. But really, there's nothing out here to hang your hat on in the IBB. Let's take a look at the BIIB real quick. Okay, what do we got out here? Now, this one is, again, of course, gapped up and then instantly sold off. 223 is this next low where this thing probably is headed. That's the June 27th, 2016 low. So I don't think, unless you had some kind of sign of strength or some kind of turnaround in Biogen IDEC, that it matters much about what you're doing. See, we got 5 minutes left in this segment. Why don't we take a look at a couple other stocks, maybe that we have interesting action in. Some of these stocks down at lows, but are not bouncing yet, with the market also make you a little nervous. You have the Lululemon with the ultra tight shorts. April 5th, this thing finally made a bottom after blowing up after earnings, 49.40. 6 million shares, got back into it with lighter volume. What you didn't have is lighter volume down from that May 11th high to the low. And again, anytime I get more volume on the way down, my first thought is, if it's going to bottom, it's going to consolidate. It's not going to just go into a V bottom. So if you're looking for stocks that instantly just start ripping out and going higher, generally this isn't the pattern that you're getting. So we want to watch this thing go sideways for a while on light volume if you're looking at that. LNG, another one out here at lows. If we, or excuse me, at highs. Shinari Energy. Now this one spiked the January 26th high, $50.53, with just a hair over 7 million shares. Spiked that on Friday with 3.8 million shares. So half the volume. Opened up a little higher this morning and rolled back down. Energy is pretty much the same thing. So I don't know if there's much going on in this other than the fact that you have made a significant high. You've done it with half the volume at the high. And normally with crude, as crude goes higher in price, there's almost always an implicit put in natural gas, which these guys are all about. And of course, the more crude that you pump, the more natural gas, and almost to the point of being sick of natural gas, i.e., there's just way too much of it to ever sell, continues to put prices on it. So higher prices mean that they're going to pump more oil, which means that there's more natural gas, which is normally kind of just opposite of what you would think. And that is, for good natural gas prices, you're kind of looking for less crude to be pumped here in the United States. So what's natural gas doing today? It's up 7 cents, $3.32. I'm going to be in the 4 o'clock hour tomorrow with Tom O'Brien. And, of course, my guest will be my brother from another mother, Mr. Andy Heck. And we'll discuss this a little bit about how and why natural gas seems to go the opposite direction most times as oil. Oil, of course, up 40 cents. I thought I saw this thing at $51.80 or $51.50 earlier in the morning, certainly a little lower, but solidly back into this $50 range. And it's kind of very weird to wonder when this thing hits the tipping point yet again and really just craters. Because, of course, on Friday we continue to see the same thing, which is more and more rigs and oil fields back into production. And it's just very tough to figure out that with more oil production here in the United States, that the glut of natural gas won't continue. But we shall see, get his opinion on it. The finish line, not so finishy. Wanted to see how this one bounced today. Again, we were talking about stocks that either hit highs on half volume or test lows on lighter volume. Again, March 24th, $12.63 for the small retailer of shoes. Man, it's kind of like having AIDS and then getting Ebola. Retailer in the mall. Anyway, March 24th, $12.63, 13 million shares. You get into it with 5 million shares. Again, you spike it, you close back above it, you get your little pop today. But again, too much energy for me off this May 10th high. And you've got, a 1.3 million share bounce today, which is fairly nothing in this. Again, a lot of these stocks are going to need to go sideways for a while to start figuring out what's going on. We've got a few more stocks to look at before the end of the day. As we get into that, we're kind of looking at the up 11 points on the S&P cash. Not even 2.1 billion shares so far. So summer trading volumes already hitting, and not a lot of push out of the way. We'll be back after this.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we were looking at the finish line. There's just kind of a quiet day out here, and I don't know if you can make a lot of it. We talked about just about every one of these. Got a question about FCX. So let's take a quick look at that. Of course, you can always email me at path@tfnn.com and call me at 877-927-6648. Man, I don't see anything out here, but this is exactly what we're talking about looking at that I like. So I do like this, and that is that you come back down and the energy kind of picks up and you just go sideways for a while. And that's what we've been doing in this since the 4th of May. You know, you kind of had a nice little, almost sign of strength on Friday, a little bit more volume. Didn't bust out of this range. And, of course, you're sideways again today with no volume. But you can kind of make a argument that if you come off highs with energy, and then you just go sideways, normally you've got a big fish in there with a buy order, and every time it goes down a little bit, they start feeding. So, and then of course they don't want to buy anything above 1180 or so on this, and so the spigot gets turned off as soon as it hits 1180. It kind of pulls back a bit, and they go back to their feeding frenzy. But it certainly looks to me like a big fish is down there buying 1150 and a little bit below, and probably all the way up to 1180 in FCX. Again, what you want to see is that the buying on this and on light or lighter volume remains kind of flat. In fact, that's one of the best signals there are, is it does nothing and just continues to go sideways. Might take it all the way into next week. We've had, of course, crude pop, some of the other commodities, but this one really interests me out here. I'm going to have to spend some more time on this thing. You're up on kind of light volume today, which doesn't make me think anything happens till next week. But this looks very interesting. If it doesn't break lower on any kind of volume, can this space out for a couple more weeks? The answer is yes. There's no signal out here. But if you saw this thing kind of bounce up early in the morning and you started seeing volume come in it, that would probably run this thing to about $12.75. But my guess is whoever's buying it down here is assuming that you might get yet another test around the $16, $17 level going forward. Grouper fishing out there. Or in the case of being up north, it would be catfish fishing. Although I hated them. Oh, they're smelly creatures, and they don't taste good either. I don't think many people from up north really know how bad freshwater fish taste. Just either no taste or not that much. Man, you go out in the Gulf, you get a brand new grouper, or you get a great ahi tuna out of the ocean and cook it and eat it, in the next few hours after it gets out of the ocean. It's better than most steaks. Ahi tuna, great stuff. See if we have anything else going on here. Wanted to look at a few more after the retail and clothing debacle last week. Want to look at one more. Oh, don't have time. We'll look at it tomorrow. I wanted to look at Ross after this thing. Wheels fell apart, fell off the wagon last week. We'll do this tomorrow. As always, sell when you can, not when you have to. See here, same bat channel, number 14 on Tiger TV. Same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.